Good morning, everyone. My name is Corey Hinkle, and I'll be your host today for the Ankerstar Wealth Daily Update. I've got one pretty juicy topic today, which is what happens after a V-shaped recovery. The S&P 500 today is up nicely again. This would make, if it holds green throughout the rest of today, that would be 17 of the last 19 days being in the green. And we're inching closer every day to that full and complete V-shaped recovery. So in our topic, I'm going to explain what a V-shaped recovery is, and then I'm actually going to show you the last 5 V-shaped recoveries that we had in the stock market on dips of 10% or more. And we're going to look at what happens after a V-shaped recovery. So before I get started, I want to remind everyone that this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com. And of course, the opinions expressed are mine and mine alone. All right, first, let me show you the 2025 V-shaped recovery. And we aren't quite complete there yet. And by complete, I mean getting back to our old all-time high from February 2025. But you can see what that V-shaped recovery has looked like. So let me just explain what a V-shaped recovery is. It's a somewhat symmetrical move higher right after a distinct and sharp move lower. In this case, we got to about a 20% drawdown from all-time highs in the S&P 500, and it's taken about 5 weeks to recover all of that. And I believe it's the fastest 20 or 25% move on a broad-based index like the S&P 500 or the NASDAQ in a 5-week period. So extremely fast move higher here. Now, I put a question mark there because this is 2025. And we don't know what will happen next. But I was wondering what happened the last time. So let's take a look. The most recent 10% or more move lower with a very fast V-shaped recovery was the 2024 yen carry trade. If you blinked, you might have missed it. It was just a 10% drawdown from all-time highs. Once we got back to those all-time highs, we had what's called a 1-month consolidation. Consolidation is the word where you get some chop. You're not getting some deep drawdown. You're not getting new all-time highs that hold. So you're just kind of chopping around. So that's the yen carry trade. This one made sense because there was some leverage, currency-related leverage in the system. Once that leverage had been removed, there was obviously some pain for some traders out there who were trying to use that leverage. But aside from that, there was no systemic or ongoing problem here. So the market 1 month later moved higher. Okay, then we had the COVID sell-off. This one wasn't a perfect V shape, but it was pretty close. It got almost back to old all-time highs in early June 2020. And then it kind of stalled out for a bit. I didn't start the consolidation timer until we hit that all-time high from February when we hit it again in August. So this one I probably don't need to explain. There was a threat of a global pandemic, which turned out to be there was a real element to that, and certainly the response was very real to that. What really made this one unique, other than of course everything that we had to deal with as citizens at that time, which for me wasn't great memories. We had a newborn and all of that. But what really stands out here was this one was a deep drawdown. So you got in a very short period of time about a 37% drawdown. And as I was prepping this video, I ended up talking to a coworker about it, and they said, man, I thought that one just went straight up, after hitting old all-time highs. And the reason that one felt so straight up even though you did get a pretty long consolidation. The reason it felt so straight up is most people were dollar cost averaging in. Steve had his famous call, almost timed to the bottom perfectly. I think by, it was like a one day difference there from calling the absolute bottom. So people were buying the bottom here, and by the time the V-shaped recovery was happening, people's accounts were rocketing far beyond their old all-time high because they were dollar cost averaging in and buying, the dip as it played out. So this one, you had a 3-month consolidation before finally leaving that 3,400 level for good. So are you seeing a pattern? After these V-shaped recoveries, the market tends to use quite a bit of energy and capital to fully recover those losses. And by the time it does fully recover those losses, it tends to want to digest for a little while. Okay, 2018, 2019. What's unique about this one? This was Trump versus Powell round 1, and we kind of have Trump versus Powell round 2 right now. That's why I tend to think that this 2018, 2019 version of a V-shaped recovery might be the one that we are dealing with here. Of course, we don't know the future though. So in this case, the market fully recovered those losses, touched those all-time highs there in April of 2019, and then you chopped around from April to October before finally leaving those levels again. All right, so a 6-month consolidation there. And here we've got a double. 2015, 2016, we had back-to-back 10% drawdowns in the S&P 500 that were both turned out to be V-shaped recoveries. And then there you had a 3-month consolidation after. I will add, this one had a mix, you can see, of causes: a slowdown in China, Brexit, Federal Reserve uncertainty. There was a lot of commodity weakness, oil and other things. Because you had so many overlapping causes here, like for example, what we're dealing with now, tariffs, that's a pretty specific isolated cause, right? But here you had so many overlapping things that it took the market quite a while to work through all this. So if you really look beginning to end, you're really looking at May of 2015 all the way out to, July of 2016, where you really didn't get any move higher in the S&P 500, even though you did get a lot of chop, a lot of mess. So, this one was a pretty drawn out flat period. And then, of course, in July of 2016, the market did end up moving higher again. So that was the last 5 V-shaped recoveries. We are in one right now, and we'll probably see some degree of consolidation either, beginning next week or beginning of June, sometime around there. So that's kind of the expectation. And I believe that's all I have today. If you found this interesting, give us a like or a comment down there, and we will see you tomorrow.